What's up everyone, it's Scotty with Money Investing. In this video, we are going to be talking about volatility, in other words, the VIX, because the volatility is coming down to its lowest level since we have seen in early 2021. It's been a while, it's been almost 2 years since we've seen the VIX at these low levels, and I think now is the right time to be analyzing it a little bit more detail, talk about what percent of stocks are trading above, below their moving averages, and of course the market's kind of hitting that resistance at the moment for both S&P and the Nasdaq as well. So hope you guys enjoyed this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the buy and sell alerts, options alerts, trade ideas. Everything's going to be included, including the private videos and of course all the other member benefits as well. So links are going to be down in the description below. First things first, I want to talk about the volatility cheat sheet. Now, VIX is nothing but the implied forecast of volatility of the markets in general, and it's also often referred to as a fear indicator or fear gauge of what the market's expecting based on index options. And VIX value also represents the implied movement in the S&P 500 plus minus whatever that is. So it is directionless, right? We're not really representing the direction, although there is a pretty significant negative correlation between volatility and the S&P 500, meaning that 70 to 80% of the times when the markets go up, volatility comes down and vice versa. But in general, volatility is directionless, right? It doesn't really represent what direction the move's going to happen in. It just represents the volatility, right? The price changes and how rapidly that's going to take place. So right now we're trading at 17 VIX, right? So if you come over to volatility, we are right now at this moment trading at 16.88, so a little bit under 17. So if you kind of look at 17 VIX value go across, the market's expectation is implied move plus minus almost 5% in a given 30 days. In a given month, over the next 1 year, 17%. Over the next 1 week, 2.4, and 1 day, it's going to be 1% plus minus in terms of volatility for the market. Of course, when the VIX is really, really high, we're looking at 74.89 volatility. Of course, markets really, volatile at that point, and we're looking at a daily move of 4 to 5% for the market. Of course, that's a very, very peak level for the VIX. That's what happened during the March 2020 pandemic. So if you come down to the volatility, actually I gotta take back what I earlier said. It's not going back to 2021 levels, but instead 2022. January of 2022 is where we are going back. So not 2 years, but a little over a year, almost 2 years. So you can go back to this level, and we are coming down, pretty much getting crushed down to these levels, trading at under 17 for the VIX. Now, as I've already mentioned in my previous videos, the reason why this is so important is because for the most part, right, it is negatively correlated, right? So when the volatility rises, markets come down and vice versa. You can kind of see this from these two charts. They're exact mirrors of each other. At the top, I've got the volatility, I've got the VIX, and at the bottom, I've got the S&P 500. And you can see that every time the VIX kind of peaked out, this is going back as far as 2021, 2022. Every time we kind of peaked out at those levels, we did see the markets, bounce back higher. That was putting in the bottom. This right here was once again when the markets pushed higher from those levels. As soon as volatility kind of tapped out at 36, 37 levels, sold right back down, and markets obviously rallied back up. This right here was once again the top in the VIX, bottom in the market. We saw again markets pushing higher, volatility coming back down. Very small peak here, starting to come down, markets pushing higher. And this right here, more recently in February and March of 2023, we saw the volatility peak out at 27.20. This is also part of the Silicon Valley Bank collapse, and the markets have been rallying from these levels. But now is a real question, because just like it happens on the top side when the volatility taps out and the markets bottom and they start to push back against each other, same thing happens on the opposite direction too. When the VIX is obviously coming down to a low point, we do see the markets trend lower after the volatility spikes. So VIX here, again, trading at low levels, spikes, markets come down. VIX here at low levels, at 16, 17 levels, spikes, we see the markets come down. You can see that represented by the arrows. This right here, once again, the markets are selling off after the VIX spikes, VIX spikes, VIX spikes. And once again, we are at this level right now where volatility is trading under 17, obviously at very, very low levels, and we've got the markets also pretty elevated, pushing higher, once again approaching that resistance of 4,200. Now, that's going to be the real question, right? Whether we actually do see the markets once again roll over if and when the VIX actually does spike. But there have been instances where the volatility has been pretty benign. In other words, it hasn't really moved all that much. It's been trading between this range, and you can go back to 2014, 2015. It's been between 11 and 19 to 20 levels, so it has been pretty much in that range within which we're trading at right now. So right now we're 16, 17 levels, and it's been trading between that range for quite some time, and the markets have continued to rally higher. We've seen a pretty substantial move to the upside. So again, if I bring up let's just do this. I'm going to bring up the actual S&P 500 on this chart and kind of help you understand that as well. So this right here, S&P 500, and you can see that, as the volatility has pretty much stayed, in that range between 11 and 20, you've seen the markets pretty much rally pretty consistently over here in this entire bull market as the volatility has pretty much stayed sideways. Although we have seen some pullbacks happen, right? So as you can notice that we have seen little pullbacks here and there, and that's part of the uptrend. That's exactly part of the entire uptrend where the markets just pull back in 2012, this right here in 2012, 2013, 2014, 2014. It's kind of like in a very nice uptrend, pushing higher, making higher highs and higher lows. And these very normal, subtle pullbacks are part of this volatility spike that we're seeing in that range between 10 to 20. So that is something to keep in mind as well. And looking forward, you'll notice that since 2017, for the most part, what we have really seen for the VIX is form these types of higher lows. So it's got kind of validated here, validated here, validated here. And right now we're once again approaching that level, that ascending support, and at the same time making some lower highs more recently. So as you can see that we are kind of trading inside this very small downtrending channel, or symmetrical triangle, I should say, because on one hand we are making in lower highs, but on another hand we're putting in some higher lows. So we are kind of converging into that symmetrical triangle. Now the real question really is going to be whether we see some type of a push higher at this support again, if volatility is going to see another spike here past 24, 25, 30 levels, because that's really what's going to keep us inside this symmetrical triangle of lower highs and some higher lows, and at the same time also pull back the market down from that resistance. But like I said earlier, we have stayed it's very common for the VIX to stay low and trade low, and the markets to continue on that uptrend when we are in a quote-unquote bull market, as also mentioned in the 2011, 2012, 2013, all the way up to 2014 levels that I showed you guys. Now moving forward, another chart that I want to make sure that you understand is the percentage of stocks trading above or below their certain moving averages. This is also really important because it coincides with the volatility, and these are really important technical indicators to pay attention to. So in my personal opinion, if you wanted my honest opinion right now, this is not the place where investors or traders are going to be looking at going long, because the risk reward is not the best, right? So when you're looking at when a percentage of S&P 500 stocks are trading above 85 to 90%, that means majority of the market is trading past above its 20-day moving average. So when that happens, you can kind of correlate it back to the VIX. It's trading at a low level. So when that spikes to the upside, I'm going to actually change the color here very quickly. Just give me 1 second. I'm going to change it to white. So when the market does spike here, we do see this indicator also come down, meaning majority of stocks once again start trading below their 20-day moving average. So it's really important to kind of pay attention to these levels because they kind of correspond with each other. And right now we're in an environment where, once again, you've got the markets here with the volatility at a low level at under 17, with the majority of stocks once again trading past their 20-day moving average, 85 to 90% of stocks trading past their 20-day moving average. So the real question really is going to be, where does the VIX go from here? Are we going to see a little bit of a pushback higher? We're going to see a bounce back to those levels at 27, 30 levels, because that's going to keep us in that symmetrical triangle. Or if it's possible that we're once again in that 2011, 2012, 13, 14, 15 levels, where the markets have just continued to charge higher. You can see that over here. So we did see a little bit of a spike in 2015. So this right here is going to be that level where, of course, the markets also, you can see that rectangle where the VIX spiked. It got up to as much as 55, and the markets also did drop. But then once again, when the volatility died down here in that range, you can kind of see that in this rectangle. If I zoom in a little bit, you can see the markets kind of continue sideways, or in other words, the volatility continued sideways and the markets just continued to push higher. And the markets are in the orange line. Up until, of course, we saw that 2018, the US-China trade wars, and that resulted in the markets pretty much hitting a bear market and volatility spiking here all the way up to as high as 34, 35. Wasn't as significant. And then, of course, the pandemic, the volatility was all the way up to 87, and we saw the markets pretty much get crashed all the way down to 35 to 40%. And of course, since then, we have seen the markets once again rally back higher, volatility come back down, and we're now approaching these levels for the VIX once again as the markets continue to push higher. So again, it's going to be a real question of technicals here. S&P 500 is once again approaching that resistance of 4,200 inside that bear camp that we have talked about. So that's a real, test of resilience between the bulls and the bears, and of course the Nasdaq also approaching that level inside this bear camp, and 12,300 is going to be that level to watch. Futures are green very much, so we are pushing higher, but that is going to be that resistance to pay attention to. A breakout is easily going to put us on the map for up to 13,200, and for the S&P to get up to 4,300 as well. So let me know in the comment section down below, what do you think about the volatility and of course its correlation with the market? And as always, if you enjoyed this video, found it helpful, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below. As always, happy investing, and I'll see you all in the next video.